Today, we're going to talk about when the stock market crash begins. But if you take a look at Ford stock and pre-market, we are down 13.7%. The reason for it was very simple. Yesterday after the bell, Ford had earnings, and as we can see by the stock price, very disappointing. We look at the expected movers out there as we are in earnings season, and today, SNY is basically going to be the biggest mover expected, plus or minus 7%. Now, next week is going to be action-packed with a lot of earnings. And we got to ask ourselves, I've been sharing you guys with this graph for quite some time, where it shows that NASDAQ has peaked out more times in the month of July than in any other month. Now, is that going to be the case once again? Because the month is coming to a close, it is certainly looking like the NASDAQ may have peaked out here in July. Now, yesterday was a very nasty day in the market. Could we potentially get a bounce today, or is there going to be more selling to come? We look at NVIDIA in pre-market is now at its ABC pattern completion down here at 113.21. It's actually trading just slightly below that price point. We take a look at Meta this morning. Meta looks like it could potentially break the swing point. If it does, watch out, it could go substantially lower. Yesterday, Meta was down 5.61%, and in pre-market, essentially flat, up a whopping 16 cents. Microsoft was getting smacked out here yesterday as well, where it was down $15, and now in pre-market, down another $2.08. But with stocks correcting, is this nothing more than a buying opportunity? We look at the dollar index. Dollar index is slightly down this morning. Then if we take a look at gold, gold is actually lower. So gold had contract rollover coming down, now go ahead and it hit the 61.8 level. Now here's where it's going to be dangerous for gold. If gold starts breaking below 23.27, watch out, we're probably coming somewhere around 22.75. Why would gold be going down as the stock market is selling? Everybody says gold is a safe haven. Now let's take a look at this article right here. Fear in a recession and bear market. You now have one more reason to worry about. I've been warning you guys about this for quite some time, but if we come down here and we look at this graph, what this graph basically goes on to show is the Conference Board's Consumer Confidence Index minus the University of Michigan's consumer sentiment. And what it goes on to say is anytime we start getting above 20, it usually signals a recession. If you look at where we're at right now, we're actually at 32.2. Now, we know they're not going to want to call a recession, especially right before the election cycle. But let me know in the comment section down below. Do you guys think we are in a recession right here, right now? Or do you guys think one is on the horizon? And if you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. Now, we want to keep our eye on this chart right here. This could be a chart of the 10-year versus the 2-year yields. Now, we know you've probably been hearing all over the news how the yield curve has been inverted. Well, when it uninverts, that is going to be problematic. This line right up here basically shows us when we get above the red line, the yield curve will be uninverted. And you can see, look how steep it has been getting as of recently. And look what little damage we have seen in the stock market. People are freaking out by a couple hundred points down. What happens when we really start to see this rocket up? We can see fear is creeping in the market because look at the volatility index. Yesterday, the volatility index was up more than 20%. Right now in pre-market, it's up another 4.22%. Now, one thing I want to caution you guys on, anytime the VIX closes above 10% or down 10%, that indicates within the next 2 days, we're likely going to get an adverse reaction, meaning that either today the VIX starts coming back down, or on Friday, now if the VIX starts to pull back a little bit, that would also give us a bit of a relief rally potentially in the stock market. Now, I know that would be welcomed, especially for anybody holding the Qs. Right now, we can see the Qs are down in pre-market. We were able to fill the gap over here yesterday, and we look at the composite profile. Do we have any areas that could really catch us? One thing I would be very concerned about would be look at the high volume area. All this area down here on the composite profile shows us where a majority of the volume has been built out. The MACD indicator on the daily chart is showing no signs of trying to firm up at this moment. 4-hour chart, the MACD indicator shows no signs of firming up. On the 1-hour chart, the MACD indicator shows no signs of firming up. But then when we come over and look at the 30-minute chart, you can see it's starting to try to round out here just a bit. Now, yesterday it was just sell, 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 sell. Only one green candle on the day. Now, when we look at the volume profile levels, value area low will come in at 462.59. The point of control will come in at 463.52. Value area low will come in at 468.04. Now, when we look at this, you can see we're already trading below the low of yesterday. So this makes it very simple. If we cannot get back above the low of yesterday, then guess what? There's no need to try to fight the tape. Just go ahead and look for selling opportunities or sit on your hands. However, if you're an aggressive trader and we start getting above the low from yesterday, then we can target the point of control. We can target each of these distribution nodes on the profile along with value area high. Anything above that, I would want to target right up here towards gap resistance at 473.80 and then up here towards the minus development area. Now, I don't think we're going to make it all the way up there today. We do have a slew of economic news here at 8:30 that could move the markets. However, I would not want to hang my hat on that too much. Then we come over and look at the futures markets real quick. And what do we see on the 4-hour chart? I want to make everybody aware Apex 7A massive 80% sale off all their valuation accounts, passing as little as 1 day. And you can also get a $150K account for only $40. You get a $250K account for only $40. And you get a $300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Then we come over and look at the futures markets real quick. And what do we see on the 4-hour chart? Count the candles. This was a down candle. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 down candles in a row, if indeed this candle does close in the red. Now, if you notice, we have a wick on the top of the candle. We have a wick on the bottom. That means we have a candle of indecision. Then when you look at the low, so far is greater than the low from the prior candle. The high is less than the high from the prior candle. Now, this candle is not closed yet, but if the candle closes like this, I would be watching this candle for a potential breakout or breakdown from this area. Now, where can we potentially break out to? To the upside, I'd be looking at this high volume area on the composite profile. And that area is anywhere from the ballpark of from 19,320 to about 19,357. If we start getting back above it, watch for this minus development area. This could be an area where we get up to and then we knee-jerk reaction on the way back down. The first time we come into minus development areas, I expect some type of reaction. We don't always get it though. You can also see the developing value area low is substantially higher than when we're currently at. As we come over and look at the daily profiles, notice yesterday's value area low, we've been below it. We've come back up towards the point of control. We've been below it. We've come back up towards the point of control. We're below it right now. If we can get above that area and we're above the overnight value area low, then that would signal that it's highly probable we could get a bounce up in the market. And if you look over here, we have a lot of high volume areas on the daily profile that we could potentially target. Now, an area to the upside as well, if things really get rocking and rolling today, one area I would want to watch is all the way up here, anywhere from the ballpark of 19,604 to about 19,626. This is nothing more than a structure breakdown point. You can see we had a little minor swing point there. We broke it. The market has failed to come back and test that level yet. So if things get crazy with the news coming out at 8:30 and the market goes rocketing to the moon, this is going to be an additional target we most certainly want to focus on. Now, as we look at the SPY, you can see so close to hitting that ABC completion. We'll see if we hit it or not. And if you notice, where does that come in at? Right within this little gap that we had over here, right into the minus development area on the composite profile. That's an area where we expect to get some type of bounce in the market. Now, is it going to be a bounce where we just do 50% of yesterday's candle and we start coming back down? Or is it going to be a more meaningful bounce in the market? That's still to be determined. Now, something I don't like on this in terms of looking for buy-side trades would be the MACD indicator. Look at the separation of the two lines. Which way are they facing? The blue is below the yellow. That is a bearish signal. And the fact that they're pointing down about a 45-degree angle, that's problematic as well. On the 4-hour chart, you can still see on the MACD, we have a good separation of the lines. Then on the 1-hour chart, the same thing. On the 30-minute chart, you can see we're trying to round out. We're not there yet, but we're trying. Value area low also is down here at 540.29. The point of control comes in at 542.20 and value area high comes in at 544.75. Now, here's what I'm going to say. As long as we're trading above the low from yesterday, then I want to go ahead and look for buy-side trades. I want to look for a bounce in the market. Why is that? Because in pre-market, I know we were already below that price point. So for me, that is going to be a point of interest I most certainly want to focus on. The low from yesterday is going to be the line in the sand in terms of should I be bullish or should I be bearish this market? We start breaking down below that level. If we're trading below the low from yesterday, then we really need to look and say, okay, where are we likely to go? Well, the next target would be that ABC completion down here at 539.16. Then we can look for the gap to potentially get filled at 537.08. And I think we're going to get a little bit more clarity when we see the news come out here at 8:30 this morning. We come over and look at the composite profile on the S&P. Notice where we're at, right into the minus development area. That's an area where I would expect some type of reaction in the market. And right now we have an inside candle forming, similar to what we talked about with the NASDAQ. At the current time, it is a doji looking candle, which means a candle of indecision. The bears are like, all right, have we pushed it too far, too fast? And the bulls are like, I don't know if I want to jump in front of this freight train. Yesterday, I absolutely got destroyed trying to do so. If you look up here, though, look at the high volume area right up here. If we start to get a major bounce in the market, this is going to be an area I want to focus on. If we pull a Fibonacci retracement, notice the 50% level is just above that area. So to me, this would act as a magnet. We know the S&P 500 loves to retrace the 50% level, and the fact that we had this high volume area also would have my attention. That area is going to be anywhere from 55.28 to about 55.34. Then as we come over and look at the daily profiles, notice, unlike the NASDAQ, we are still trading well below yesterday's value area low. Now the question is, will we start to firm up? Overnight, we've had a 39-point range, and we have an untested point of control from yesterday up here at 5506.75. So for me, if we get back above value area low from yesterday, this is going to be one of the targets I want to focus on, 5506.75. However, when we take a look at the overnight volume profile levels, they could potentially find us an early entry into the market to where we can put on this trade and try to get in with a little bit less risk. All right, this morning we had a little bit of economic news. We had advanced GDP numbers come out quarter over quarter, 2.8 versus a forecast of 2.0. Previously 1.4, so a little bit hot on that reading right there. The weekly unemployment claims dropped down from what the forecast was, 237, and previously it was 245. So that's good in terms of jobs. Advanced GDP price quarter over quarter came in at 2.3. That was a miss. Durable good orders came in at 0.5 versus 0.2 versus previously 0.1. That was a little bit hot as well. But then durable good orders month over month, yikes, minus 6.6. They were forecasting 0.3. Now, what does all this mean for the stock market? Well, if we look, we can see the S&P right now is trying to bounce on the way up. And we come over and we look at the NASDAQ, very similar as well. Before the news came out, they were trying to go ahead and retest the London lows. And now we're starting to get the push on the way up. Now, like I said earlier, I do expect a bounce in the market. And we come over and we look at the overnight volume profile levels real quick. We have value area low coming in at 19,124.75. The point of control comes in at 19,159.75, and value area high will come in at 19,254.75. Now, we've already been below yesterday's value area low, and now we've already dipped below the overnight value area low as well. So now I want to play the rotation on the way up. We can target value area high. Then I want to target the point of control. Anything above that, then I want to pick off these other high volume areas on the profile along with value area high. If we can clear 19,511, then I want to go ahead and target that breakdown level. And I don't know that we're going to make it up quite that high today, but I do want to give you guys additional targets just in case the market gets ripping and roaring. Then we come over and look at the S&P 500. We have value area low coming at 5457.50. The point of control comes in at 5467.50. Value area high will come in at 5480.00. Now, we've already been below value area low, and now we are on the way back up. So from a overnight perspective, we have a rotation on the way up. We come over and look at from a daily perspective, you can still see value area low is still substantially higher. And this is one of the ways the overnight volume profile levels can give us a huge edge into the market, because now I want to be looking for buy side trades because we've already been below value area low and now we're above it. Now, where that changes would be if we break the overnight value area high and we start coming back down. Then I want to go ahead and look on the sell side, point of control, value area low, and then additional targets from the composite profile that we talked about earlier. However, if we break value area high, we come down and then we start coming up again, we can then look to be back on the long side of the trade, and any target above the overnight value area high would then come into yesterday's value area low, and then even all the way up here towards yesterday's point of control at 5506. Anything above that price point, we want to simply pick off some of these other high volume areas on the profile, because value area high is all the way up here at 5571.25. If the market made it up there, that would be absolutely insane. I don't think that's going to be the case today. I think that's, would be too far, too fast, but who knows? Crazier things have happened. If you guys want to learn how to trade volume profile using order flow, watch this video right here.